Hi guys, welcome to our gold price daily analysis. Today is Tuesday, the 5th of February 2019. This video is brought to you by the coach. Remember always, our job is to make you rich. If you are a new subscriber to our channel, welcome aboard and thank you for trusting us as one of your partners in your journey towards success and financial liberty. As a new subscriber, it may concern you to understand that this analysis has four main phases. We start by phase number one, which is a recap. In this part of our analysis, we do discuss what we have already pointed out in our previous videos. In phase two, we have fundamental analysis, and in this part we do highlight the most important fundamental news that we do believe it's going to have a significant impact on the price action of the gold. On the phase 3 we have technical analysis, and we do talk about the technical indicators which may have an impact on the price of the gold. On phase 4 we have levels to watch. In this part we do define the price levels the yellow metal is expected to be trading within. Actually, we have added two new features to our daily analysis. The first feature is the frequently asked questions. In this part we are going to provide answers for the questions that we receive from you guys. This part will be the first to start with before the analysis. The second feature is the trading hint, and we are going to teach you a trading technique, including things that you have to do and things you should avoid, and this part will be placed right after the analysis. Let's start with the frequently asked questions. We have today only one question. The question is, does the technical analysis really help traders forecast the price of a certain financial instrument? Well, the answer for this question is yes and no at the same time. No, because the price of a particular financial instrument is factored by two things: by the fundamental news and by the technicalities of the price itself. So technical analysis alone, cannot be the only guide. And yes, because in the absence of the influential fundamentals, only the chart could tell you where the price is heading. And for the sake of simplicity, take this example. Imagine yourself driving your car from home to a place which is unknown for you yet. The GPS application on your mobile is your guide to your destination. Now this application works exactly like the chart, but you cannot neglect that there are fundamentals related to the route that you have chosen to take to reach to that destination. Those maybe include weather, traffic, maybe an accident or something happened in that road. So bottom line, if you wish to become a successful trader, you got to learn how to read and how to analyze the chart. And moreover, in our newly added corner, trading hint, we are going to teach you guys the technical analysis, but this is how is going to happen gradually over so many videos. Let's start our analysis for today. We will start, as we said, with the recap. Gold, we said in the last video that gold is trading in a bullish territory. We said that gold failed to close above 1,321, which is needed to confirm further gains to the upside. We said that the US dollar is expected to rise, supported by the strong NFP released last Friday. Meanwhile, gold shall experience a correction which may extend to 1,308, and this is what happened today literally. Open the chart, you will see the price. The low was 1,308.47. We said also sell at high around 1,331, which was out of the range today, and buy as low as of 1,309. If you bought at 1,309, you could have closed at 1,315 today itself, though we don't want you to close. Actually, we want you to keep long because we are expecting the price to reach 1,340. In the trading strategy section, we said to close the short and move to long. Let's talk about the fundamental analysis. We are expecting today to have the US ISM non-manufacturing PMI is expected to leave an impact on the gold price due later on today. US dollar is expected to stay on the Vins, which means we mean by this, okay, that it will have a tight trading range. US dollar is at its own at this part of the time, okay. The dollar lost the luxury of the Fed keep interfering to fix the things up. So what we mean simply, if there are good news, we will see the dollar appreciating. If there are the news less than expected, there will be depreciation on the dollar side. Let's move to the technical analysis. Trading range was 1308 to 1317. Numbers are rounded. Gold is going to print a lower high and a lower close, which is okay, shows a signals that the gold is under pressure. We are waiting for fundamentals to be released. The market is still open, but the price is like 1313.15 right now. Our perception of the gold is still that it's going to hit for more like 1340 and more, and we consider this decline in the price as healthy so far. We expect gold to be trading between 1308 to 1333. In the trading strategy, we have, okay, if you are long, stay long, defend your account until the 1300 and target 1340. If you are already short, make up your mind and close your short positions if you wish, or you stay, that's up to you. The level is 1304 to 1308 is good to buy. We don't expect to see these prices, but if it happened, okay, buy it there. The levels 1333 to 1335 is good levels to sell the gold. If your target is short as $5, okay, or $7, something like that, you can sell at 1333. Let's look at the prices that we expect to see today. We are expecting to see today to the upside 1317, then 1326 and 1333. At 1333 it's a good price to sell if you wish, okay. And levels to watch to the downside, we have 1308, we have 1304 and 1300, which is a major support. We don't expect to see those prices unless there is a release above forecast for the US data. Let's move to talk about the trading hint. The tip of the day is the support and resistance. We are going to talk about support and resistance. By definition, support and resistance are certain predetermined levels of the price of a security, at which it is thought that the price will tend to stop and reverse. For the resistance is the price point at which the rise in the price is stressed by the appearance of growing number of sellers. I'll give you a very simple example to understand this. Imagine that you are a field runner, and it happened that you do participate in local games on monthly basis. Your record shows that your best time to run a 1 kilometer field is 3 minutes. Your resistance is any time that is less than 3 minutes. If it happened that there is a betting center around you, okay, and the people in that betting center are they like to place bets against their favorite athletes, so you will find that so many bets have been placed that you won't be able to run the field in less than 3 minutes because it's a resistance. On the support is a price level at which buyers tend to enter the market under the belief or the perception that the price of a particular financial instrument won't go below that level. Imagine the same example that we have given to you, okay, that you are that field runner, okay, and people at the betting center are going to place bets, but in this case they were going to be placing bets on the unlikelihood if you running that 1 kilometer field in more than 3 minutes, because more than 3 minutes is a support for you. So I wish that you have understood the idea of the support and the resistance. Thank you for watching this video. Guys, like the video to leave the impression for the other viewers, and share the video, okay. You will help us gain more subscribers, and you will help us reach more audience. And subscribe to the channel. Basically, you will be notified and you will know about our new releases on a daily basis. Thank you so much, guys. I'll see you tomorrow.